Something just happened in Washington that's going to kick off the next phase of Bitcoin's bull market. Because after years of delays, confusion, and regulatory stalling, the US Senate just advanced the Genius Act, the first real federal law giving legal clarity to stablecoins. Over 60 senators voted yes. Wall Street is already responding, and this is changing everything for crypto. Because, like it or not, stablecoins are the rails. They're how money enters the system. They're how institutions access crypto, and now those rails are being made official. So what does it mean for Bitcoin? Well, simple. When the roads are clear and capital is flowing, Bitcoin is the first destination. Not altcoins, not meme coins, Bitcoin. This bill didn't regulate Bitcoin directly, but it just opened the floodgates for capital to reach in. And if you stay with me, I'll break down exactly how you should play this news. Now let's dive in. This new US law could send Bitcoin vertical. Here is why. So here you see a tweet by the Coin Bureau, and they said, just in, the US Senate has officially passed the Genius stablecoin bill with more than 60 votes. So what actually happened here is a motion to invoke cloture. So this means that after some discussion, they have voted that they are now going to officially consider this bill and turn it into official legislation later after they have passed it through the House, through the Senate, and after they made a few alterations left and right. But they have basically agreed that this is an important step for the US government to take in order to legalize stablecoins. And in this video, we're going to break down why it's so important for the US to embrace stablecoins, especially right now, because they have been fighting against it for a very long time. But apparently that fighting is now turning into embracing it. Maybe something that should have happened way earlier, but I believe right now the crypto industry just gained so much momentum that I call this the great pivot. So all of these banks, governments, and other entities within the traditional financial system were all fighting against Bitcoin and crypto. But now they're seeing that it's much more interesting and lucrative and beneficial for them to embrace Bitcoin and crypto, right? Why swim against the waves if instead you could be riding the waves and you could be surfing on top of them? That's something that's much more enjoyable, right? So see Bitcoin and crypto as this massive wave, and banks and governments are now understanding that they should ride that wave instead of trying to resist it. So with 66 votes and 32, with 66 votes for this, advancing this new Genius bill and 32 votes against it, it's clear that there's a clear majority support for this bill and that they're going to advance it to the next stages. So, why is this so significant? Of course, we have Bitcoin. Bitcoin is the first project within the crypto space. It's the biggest project within the crypto space. Most amount of money is in Bitcoin, but stable coins form a very important component of the entire crypto ecosystem. Without stablecoins, the entire crypto ecosystem would be totally different from where it is right now. So they're very important, and this law will only help it to become even better and a more important component to the crypto ecosystem. So as of recording this video, Bitcoin is hovering around, 110,000, 107,000. It's pushing against the previous all-time high of $110,000. It might be a little bit higher, a little bit lower, depending on when this video comes out. And after years of legal uncertainty, because under the Biden administration, the SEC was attacking the crypto industry, they believed in enforcement by basically suing crypto companies. Many of those companies were considering moving the US because it wasn't a very favorable environment for them. They couldn't really flourish. There was always uncertainty, like how are the laws going to change, what lawsuits are going to be filed against us soon. So now finally with this new Trump administration, there's a clear signal from the top. We must provide a clear legal framework for the crypto industry. And the US Senate is advancing crypto's first real law. So here you see this bill. in the Senate of the United States. Yeah, here you see, so the main people pushing this bill forward, Mr. Haggerty for himself, Mr. Scott of South Carolina, Ms. Gillibrand, and Mrs. Cynthia Lummis. So Cynthia Lummis is a very important senator. She is, like, I would say, the main pro-crypto senator. She's been pushing for the US Bitcoin Strategic Reserve and many other rules and regulations that would push the crypto industry forward. But yeah, here you see this, this bill. And I mean, we're not going to go into it in great detail. I just want to show you that it is being worked on right now. So the whole goal of this bill is to provide for the regulation of payment, stablecoins, and for other purposes. So what does this stablecoin bill actually imply? Well, the Genius Act, which aims to regulate stablecoins, advances in the US Congress. So that just happened. The law requires stablecoin issuers to maintain one-to-one reserve backing, to conduct regular audits, and to comply with anti-money laundering regulations. So why is this important? Well, right now, there's a few different stablecoin issuers, mainly USDT, Tether, and USDC by Circle. All right, there were others like DAI. You also have a stablecoin by Ripple, and there's a few out there. I believe Tron also has a stablecoin, but a stablecoin should represent a one-to-one peg to the currency that they're representing. In most cases, these stablecoins are representing the US dollar. So that means that if you buy a stablecoin, so you deposit $1, you should get 1 USDT or 1 USDC in return. Similarly, if you deposit or you repay 1 USDT, then you should get $1 back, right? There should always be this one-to-one conversion back and forth to these pairs. Now, there have been many concerns in the crypto space, especially regarding Tether. Tether is the largest stablecoin out there with the largest market cap. And there have been many research reports and speculations from experts saying that Tether is not one-to-one backed by US dollars or equivalents. So why am I saying equivalents? Because oftentimes these companies, they don't hold USD, they hold short-term treasuries. So 1-year treasury bills, so they can earn a little bit of interest on their holdings, right? Now, yeah, many experts believe that Tether was not one-to-one backed. And this caused a lot of uncertainty around the whole stablecoin industry. Also, we saw the whole fiasco happening in this boom, in the previous bear market, where the Luna stablecoin basically went to zero, and this had a very big cascading effect on the crypto ecosystem. So as crypto matures as an industry, lawmakers want to provide more protection for consumers, right? And that's needed, I believe, because the crypto industry was the wild, wild west for many years. There were no laws, no regulations, everything was allowed, and yeah, a lot of cowboys entered the industry, and they basically preyed on unknowing and uneducated investors in the ecosystem, which just wanted to get rich quick, right? That's the mindset that many people within the crypto ecosystem have. So when you advertise really high returns, but people don't really know what's happening underneath the hood of the protocol or ecosystem or crypto project that you're pushing on these people, then yeah, it can create a very big hazard. And a lot of people can go bankrupt in such a situation. People can lose their hard-earned savings. And that's why I do believe that laws and regulations and regulatory clarity is really important. So I'm a really big fan of this. I hope that this is going to place a lot of accountability on those stablecoin issuers, and that this is going to take away a lot of the risk and uncertainty from the system. So yeah, I'm really really excited about this bill. So here the Genius Act will protect consumers, bolster national security, and expand financial inclusion across the country. And as Senator Tim Scott says it, it's an important first step in delivering on President Trump's promise to make the United States the crypto capital of the world. So this is all coming back to what Donald Trump said in 2024 when he was campaigning for his presidency. He said that if he would become president, he would make the US the crypto capital of the world, right? So he came out with an executive order, and in this executive order, he basically established a strategic crypto stockpile. Many people within the crypto ecosystem were a little bit disappointed because he had one job: to build a Bitcoin treasury. Not a crypto stockpile. The US, they don't need Cardano, they don't need XRP, they just need Bitcoin, digital gold. Anyways, now you're seeing the next few steps in the process. So they're now trying to advance the stablecoin space. So all in all, I'm really positive about these developments. And hey guys, by the way, if you're watching this video right now and you enjoy these breakdowns of all of the stuff that's happening in the market, in the financial system, in macroeconomics, and you want me to break it down into simple and easily digestible bits and pieces, then make sure to like this video and subscribe to my channel, because I'm going to be posting regular videos just like this one to help you to make sense of everything that's going on and to help you to position yourself for maximum profits. Now let's continue. Okay, so here Cointelegraph, here new Senate Majority Leader John Thune claims the Genius Act is the first step in bringing digital assets into our financial ecosystem. That's correct. So Tether is, for example, not established in the USA. They moved to the Caribbean, I believe the Bahamas. That's where they have their HQ. Why? Because then they're outside of the US jurisdiction, because the US didn't have many clear laws and regulations around stablecoins, so they decided to move outside of the US jurisdiction in order to build Tether. But instead of the US scaring away new crypto companies and new crypto initiatives, they now want to bring everything back to the US because they prefer to work with these companies in order to establish a flourishing ecosystem. Here is a tweet by Senator Bill Haggerty. The baseless opposition to the Genius Act is nothing but a distraction. I think this is just a red herring. The fact is, so many in the American public want to see the Genius Act passed and bring the United States payment system back into the 21st century. That's totally right. So I believe realistically, I don't understand why you would be against this bill. I get it. There's one reason why you could be against this bill: if you're part of the traditional financial system. I mean, if you're a bank, you might see some of your transaction fees go away because people prefer to transact on the blockchain instead of through your expensive SWIFT payment network that charges way too much money and takes way too much time for every single transaction. So yeah, if you're part of the traditional financial system, and I mean, if you are a bank or a financial institution and you're investing billions into lobbying in Washington, D.C., and you have some agreements with regulators that they should act in your behalf, yeah, then I understand that there's some people that would vote against this bill. And unfortunately, that is how the global political system, I'm not even saying the United States because this happens all around the world. Politicians can be bought. Money speaks, all right? Money buys influence. So yeah, some people might be compromised and might not actually be against it, but the people paying them are against it. So here you see Washington and the stablecoin industry. There's a lot of money going around in this industry, and that's why it's time to start thinking how to properly shape it. And with that shaping and regulatory clarity comes confidence, and investors need confidence. Investors don't like uncertainty. So legal rules bring back big capital to the table. Sorry guys. So yeah, we need that big capital, because here you see the market cap since 2021. And so yeah, what happened in 2021? We saw that a lot of new money was pumped into USDC, which is one of the largest stablecoins out there. So USDC reached a market cap of $55 billion. And then for a while, actually, the market cap went down. And now the market cap is increasing very rapidly again. So we see that since 2025, actually in January or Q1, the USDC market cap went up very rapidly to the point that it exceeded its previous all-time high of $55 billion of market cap, which is great. This shows that a lot of new liquidity is being pumped into Bitcoin right now. Cryptos R Us, United States AI and crypto czar David Sachs says that the stablecoin bill will pass with significant bipartisan support. We could create trillions of dollars of demand for our treasury practically overnight. So let's uncover what is going on here. I've been making a lot of videos about this recently, but the US has a very big problem right now because it has $36 trillion of debt, almost $37 trillion. That's 37 with 12 zeros behind it. That's such a large amount of money that most people can't even comprehend how much money that is. And most of that money, or a lot of that money, like $9 trillion of that debt, needs to be refinanced this year, meaning that the US needs to take out more loans in order to pay back the old loans. And the other problem is that recently the United States, their basically debtor ranking or rating was downgraded. So everyone has a credit rating, individuals, companies, and even countries. The United States had the highest credit rating in the world. I believe that's a AAA or AAA+, and it recently got downgraded, which means that investors and financial institutions around the world are less confident that the US will be able to pay back its debt in the future. Now, when the US needs to issue new debt, it needs to have people that are willing to borrow that money to the US. But with less confidence in the US to repay back its debt, there's less people buying up that debt, or basically willing to lend out that money. So USDT and USDC and other big stablecoin issuers, what they do, and I mentioned this earlier in this video, they take USD as collateral and then they invest it into treasuries. So right now, Tether is one of the largest individual holders of US Treasury bills, meaning that they lend money to the United States in order to make a little bit of interest. Usually that's a short-term Treasury bill. So by having these stablecoins and helping these stablecoin issuers to grow, the US is expecting to have more buyers for their debt, right? More people willing to lend money to the United States. And that's what they're talking about. So we could make trillions of dollars of demand for our treasury. And that's crazy. So and why is it important, these stablecoins? So with a stablecoin, you can go to a centralized exchange or a decentralized exchange and you can swap that for Bitcoin, or you can buy Bitcoin on an exchange. And the Genius Act is there to help to cement the US dollar dominance in the digital economy, right? So USDT is currently the most dominant stablecoin in the crypto ecosystem. USDC is very close as well, but most volume is still happening in USDT. Now, let's say that the US kept on attacking the stablecoin space and the crypto industry, then maybe some other alternatives would arise. People would start to find non-dollar denominated stablecoins, or maybe stablecoins in another currency that's more favorable. So it's very important for the US to maintain that dominance. And now with this stablecoin bill, they can make sure that the USD is even the most dominant currency within the digital ecosystem. So Luna Ventures posted this tweet: "The advancement of the Genius Act marks a significant step towards regulatory clarity in the stablecoin space. It reflects a broader, long-anticipated shift towards integrating digital assets within the existing financial framework." Nice. So this is not just to help stablecoins. because stablecoins just help to add liquidity to the ecosystem, to the crypto ecosystem. Because think about it, when you want to put money into the crypto ecosystem, the first thing you usually do is you buy stablecoins. You convert a dollar to USDT or USDC, and then you swap that against a trading pair like Bitcoin, and that will give you Bitcoin. So Bitcoin is the first thing that stablecoin liquidity touches. So what I mentioned before, if you go on these exchanges, you have these trading pairs like Bitcoin, USDC, right? So if you hold USDC, then you can buy into Bitcoin by trading this trading pair. And here you see, for example, Bitcoin to USDC over time. So let's say that today you would want to buy 0.5 Bitcoin, then you would require 52,000 USDC. And here you see 1 month ago that would be 47,000 USDC. 1 year ago, 33,000 USDC. So this trading pair fluctuates. The ratio of how much USDC you need in order to buy Bitcoin changes over time. But it's important to note that the availability of this trading pair, Bitcoin to USDC, allows investors the opportunity to either get exposure to Bitcoin or to take profits or to hold a certain part of their crypto portfolio in stablecoin, so just in dollars and not be exposed to Bitcoin. That Martini guy is saying breaking banking giant UBS says it's getting active in Bitcoin at all-time highs. Big banks are just buying Bitcoin and we're going so much higher. So this is also part of what I mentioned in my introduction. Right now we're experiencing the great pivot right in front of our eyes. Banks, institutions, governments, they were all fighting against Bitcoin and crypto in the past, but now they are just embracing it. They want to ride the wave instead of trying to fight it. And banks now have employees and financial advisors that are working for them, and they understand that a lot of money is made if they can sell Bitcoin and Bitcoin-related products. That's why the BlackRock Bitcoin Spot ETF was one of the fastest growing spot ETFs in the world, in the history. It's the fastest growing spot ETF to grow to $70 billion in assets under management. So that's absolutely crazy. So Crypto T is saying this is getting crazy. The moment people can transact with Bitcoin seamlessly, they'll realize there is no need for a government currency. And when access improves, the price tends to follow. So liquidity always lifts Bitcoin first. Here you see a chart. You see that when the liquidity, so the stablecoin supply, goes sideways, then the market always tends to go sideways as well. But when the stablecoin supply tends to go up, that's also when the price of Bitcoin tends to go up. And right now we're still in an upwards trending stablecoin supply, so that probably means that we're going to see the price of Bitcoin go up soon as well. And it kind of makes sense, right? Because stablecoins add liquidity to the crypto ecosystem, and liquidity usually tends to follow in the best projects, which is which is Bitcoin. And Bitcoin is also perfectly tracking global liquidity. So what does that mean? Right now, governments around the world are all printing trillions of dollars, but then in their own currencies, so yens, pounds, euros. Literally, the money supply is growing and expanding every single day. And Bitcoin generally tends to be directly correlated to expansions in the global money supply. So when more governments around the world or central banks around the world are printing money, then usually a lot of that flows directly into Bitcoin and is proportionally pumping up Bitcoin in a similar ratio. So when liquidity is pumping, risk assets like Bitcoin don't just survive, they thrive. Central banks print, markets run, and Bitcoin flies. And that's what we like to see. So here you see the chart of the Bitcoin dominance. So it's probably a little bit different than previous bull market cycles. In previous bull market cycles, we saw those altcoin seasons where altcoins started to pop, where Ethereum started to pop. But this bull market cycle, it's all about Bitcoin and institutions buying up Bitcoin. and hence the Bitcoin dominance is still very high, somewhere around 63%. Crumbling vaults prove fiat's fortress is fragile, right? So all of these governments around the world are struggling. Japan is struggling. The United States is struggling. Europe is struggling. Great Britain or UK is struggling. And Bitcoin is an unbreakable beacon of sound money because governments can't touch it. I mean, they can't change it. They cannot print more Bitcoin. There will be a maximum supply of 21 million Bitcoin that will ever be in circulation. And because it's the only real true scarce asset out there, or one of the only few real true scarce assets out there, we're seeing a massive run on this asset right now. Banks are buying, pension funds are buying, countries are buying, countries are mining, corporations are buying aggressively. Like every single week and even day, we're hearing a new announcement of a Bitcoin treasury company. So this is happening right in front of our eyes, guys. So I would say there isn't a more interesting time to be in the market than right now. And with this genius act that is potentially being included in the legal framework, it will also give institutions a cleaner way to get in. Bitcoin is now easier to hold for institutions as well. That's what you're seeing when we look at this graph of the assets under management of the Bitcoin spot ETFs. So here you see over time, Bitcoin spot ETFs have been accumulating a lot of Bitcoin. All of that has happened in just a little bit more than 1 year. These Bitcoin spot ETFs combined hold around $1.2 million. And the easiest way for institutions to get exposure to Bitcoin is by buying up Bitcoin spot ETFs. And that's what, for example, a lot of banks and pension funds have been doing. Now, you're seeing that some of the largest giants in the financial space are now talking about also launching stablecoins. One of those is Fidelity. Fidelity is one of the largest asset managers out there. And with these new laws and regulations around stablecoins, they are considering if they should also enter the stablecoin space. So imagine that they can offer stablecoins to their portfolio of customers, right? I believe they're managing trillions of dollars in assets. So if just a small fraction of that flows into stablecoins, then it means that billions will flow into the stablecoin market, that new liquidity will be added to the crypto ecosystem, and that, again, that will pump Bitcoin. So, yeah. The takeaway is very simple. This is more than just a stablecoin story. This bill quietly sets up Bitcoin for its next big run. So here is a tweet by Chiefy, and he's saying the next parabolic run is going to start on June 1st. Well, we already saw that recently the price of Bitcoin went up quite a lot. It bounced back very hard from the tariff fears that we saw earlier this year. Bitcoin was skyrocketed to $350,000 this cycle. Altcoin season kicks in about 2 weeks, and $100 from now will be $15,000 next month. Here's a list of altcoins. Anyways, he's talking about altcoins. I don't care about altcoins. I mainly care about Bitcoin. So talking about Bitcoin and talking about this tweet, guys, I'm really curious to hear your thoughts in the comments below. Do you believe that a $350,000 Bitcoin is a realistic target this cycle? Let me know in the comments. Type yes if you believe that's possible and that you agree with Chiefy, or type no in the comments below if you believe that that's a little bit over optimistic. In any case, I hope that you enjoyed watching this video. If you did, please make sure to like this video and subscribe to my channel. For me, that's really great feedback to understand whether you like this video or not. And it will also help me to push to make more videos like this one, because I know that you guys get good value out of it or not. In any case, it's fine. But for me, it's good motivation to make more. So help me out. Hit the like button, subscribe to the channel. And guys, peace out, take care, and I'll see you in the next one.